Hey guys, welcome. This is Rob from freefamilyfinance.com, and today we're going to take a look at mortgage calculators. They are not terribly exciting, but they are terribly important. And if you're considering purchasing a home or already have a home and you're considering refinancing, this is an excellent tool that you need to have in your back pocket as you make some informed decisions along the way. We'll take a look at them, how to use them, and what information they give you, and we'll do that right now. Here we are at the freefamilyfinance.com homepage. As you'll notice up here at the top, new tab, mortgage calculator. We thought it was important, so we stuck it on the site. So here we are. Here is your mortgage calculator. It's not terribly intimidating. Just answer a few questions, hit calculate, and it'll give you all the information you need to know. For this example, we're going to assume we're going to buy a $200,000 house, pretty decent house. We stuck that in the purchase price field. We're also going to assume we put a 20% down payment down on that house. That is going to work out to be this $40,000 number you see over here to the right. There's a couple different mortgage terms you can use. You'll see 15-year mortgages. You'll see 30-year mortgages. We generally lean towards the 15-year fixed. So that's what we're going to use for our example. So we've got 15 years in the mortgage term blank. Below that, you've got the interest rate. Interest rates change every night. How in the heck do you know what the interest rate is? Fantastic question. We're going to click over here to bankrate.com, an excellent source to answer that question. This is their homepage. And right over here on the right-hand side, you see the overnight averages for interest rates. You got your 30-year fix. You got your 15-year fix. And you got your adjustable rate mortgage, which is death. And if you've watched the news at all in the last 6 months, you know how bad those suck. So you don't want to do that, but you got your 15-year fixed, and we're going to scoot over here and see that it is 4.56%, which is freaking awesome. That's a darn good interest rate. If you want more specific to your area, this is just a general figure for the nation. You can put in your zip code here, search, and it'll give you some numbers that are more specific for where you are in the country. But we're just going to proceed with this 4.56 interest rate. We'll click back over here. We're going to throw in our 6, and we're good to go. The next blank is the property tax. That's kind of a tricky one. You just kind of have to figure that out. You usually have to ask your city, your county officials to figure out what that number is. If you're ballparking, ask a friend that has a house in a similar price range near where you're looking. If you were getting down kind of the next level of your search, you probably could call the city, the county. A good realtor could probably also help you figure out what this number is. I know from my experience in my area, my part of the country, that's probably a little high. So I'm going to kick that down to $1,300 a year. The closer you can get on these two numbers, they're a little bit elusive, but the closer you can get, the better the rest of the figures that the calculator provides will be. So we want to put a little extra time into that and make sure we've got some good numbers there. The next one is property insurance. That's your homeowner's insurance. That's what's going to protect you if your house burns down. You got to have that. All your stuff's in there. Not good. Also, the bank that gives you the loan will require you have homeowners insurance because they own part of the house too, and they don't want everybody to lose due to some kind of catastrophe. So we're going to have the homeowners insurance in there. You can talk to your insurance professional. They can probably give you a good estimate of what that's going to run you. So we'll just stick with the $850 per year figure. Lastly, we've got the mortgage insurance, the PMI. That is the insurance you're going to pay if you don't put a 20% down payment on the house. For example, we've got a 20 here, so this is kind of blanked out. If we kick this down to say 15, it becomes alive. Voila. This number, your real estate agent, your lender could probably give you a good rough idea of what that's going to be. That's going to be a little extra fee you pay each month on your payment to account for your lack of having a 20% equity position in the house. Now, that being said, after you've lived there for a few months, a few years, you've built up your equity in the home, and you now own 20% of the purchase price of the house. Well, get an appraisal, take it to the bank, say, hey, what the heck? I own 20% now. Get rid of this PMI, and they'll do it. So you definitely want to do that because you don't want to pay it any more than you have to. So definitely look at that. The next blank is going to be the first payment date. That's when is this business all starting. For example, say we're going to move as soon as summer kicks around, maybe a little springtime. We'll kick it in at April of this year, and that way we're not moving in the snow. So we've got all this figured out. We've got our $200,000 house, and we're going to put in our $40,000 down payment, which means our total loan balance is going to be $160,000. So as we proceed, we'll hit the calculate button, and we'll run off of those numbers. The next screen, kind of overwhelming, kind of crazy, but a lot of good information here. You have got your total monthly payment. That's a deal breaker, ladies. That could be all the information you need for what you're looking at. Maybe you're just getting a rough estimate of how much house you can afford. You can monitor this number and close this out, go back, change the home purchase price, and just keep bouncing back and forth until you can figure out, get this number in the neighborhood of where it needs to be. This total right here also gives you the total cost of this mortgage. We'll look at that a little bit more later. And here's 15 years from when the mortgage is going to start. That's when it's going to end. That's when you'll have a paid for house, and that is awesome. This chart here is just a graphical representation of all these numbers below. Each year gets its own column. The green is the amount of principal you paid that year. The yellow is the amount of interest, and the purple is the amount of taxes and insurance. The red line is your loan balance decreasing over time until you get the house paid for right there. Boom. Awesome. So this is just a fancy way of showing this right here. One little note, take heed to the fact that over time, the amount of interest you pay each year slowly decreases until the last couple years you're hardly paying any. The opposite of that is over time, the amount you pay towards principal each year slowly increases until these last couple years you're knocking it out big time. That is awesome. That's also why they say you ought to live in a house for 5 years to make it worth your while. It's kind of the logic there. The average home loan in America, 5 years long. So you'll notice over the first 5 years, the bank kind of has it set up where they're going to make sure they get their money for your loan over the course of those first 5 years. So not an evil bank thing, just a reality. Just the cost of their doing business. So anyway, it's just something to keep in mind. Below, you'll see the numbers for those same statistics, and you'll also see what that ending loan balance will be each year as you slowly pay and pay month by month, and then boom, your house is paid for. Zero balance. That is awesome. You have, over the course of this 15 years, paid $160,000 towards principal. No surprise there. You also paid over $60,000 in interest. That kind of sucks. I don't know about you. For me, that's a pretty good incentive to pay a little extra on my mortgage to try to minimize that as much as possible. But it's still not terrible, and it's certainly a lot cheaper over the period of that time than renting the whole time. So if your life permits, definitely worth buying real estate. Don't let that scare you away. But just something, those are real numbers. That's what you're going to be paying in interest over the course of that 15 years. So anyway, it's just something to keep in mind. Here's your total for taxes and insurance. And so when it's all said and done, you can fool around with these numbers. You can kind of get the best give and take scenario of how much house you want to pay and what you can afford. This mortgage calculator provides you with a lot of great information. Whether you're looking at buying your first home and you're just trying to get some ballpark ideas of what areas you can live in and how much home you can afford, or if maybe you're looking at refinancing and you're looking at these interest rates, which are at near all-time lows, and you're gonna shave a few points off of your interest rate. This is a great tool to kind of have in your back pocket. As a reader of Free Family Finance, I wanted to equip you with this as you're making some informed decisions about your personal finances over the course of your life. This is something you kind of want to keep handy, want to keep familiarized with. So for more information about this kind of stuff, you can always visit freefamilyfinance.com. If you scroll down here to the bottom of any page, you have the browse by topic. There is a section for mortgages. as you can see right there, there's also a section for real estate. So if this is kind of the phase of life you're in and you want some more information about those topics, feel free to click right there, and we'll kind of keep you up to date with what's going on in that world. But anyways, thanks for joining us today.